Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA. And today we've got a really fun episode. We are on vacation. It is the holidays. So what we have is an interview that I sat down with Wil Slickers, my co-host of Good Morning Hospitality, where we really dove into my history within the travel and tourism sector. We discussed the impacts of COVID-19 and its role in sort of shaping sort of market dynamics that we see today. And then we dig into some predictions on what we expect is sort of next in the STR market. We talk some about AirDNA's acquisition of Uplisting and our new video series that AirDNA pushed out called Jamie's Lane Change, where it sort of chronicles my recent adventure in short-term rental investment. So I really hope you all enjoy this episode and happy holidays.
All right, Jamie Lane, welcome to Slick Talk for the first time ever. First time guest, long time listener, or some type of statement. I don't know.
Happy Monday.
Happy Monday.
No, sorry, it's Tuesday.
Yeah.
No, thanks for having me, Will. I've been a longtime listener, and I think this all came out of you had Andrew Kitchell on 5 times, and I had never been asked once to be on the show, and so yeah, here we are.
It's crazy. I can't believe we've never actually had you on Slick Talk. And for the listeners who may not listen to Good Morning Hospitality or know that we have another show that I host with Brandy and Michael and Jamie. I can't believe this is the first time. Andrew Kitchell's a great guy. Love you, Andrew, if you're listening. But this is surprisingly I feel like I recorded with you so often through GMH that I'm blown away that we didn't have a Slick Talk episode together. But this is it. This is where the listeners that maybe listen to GMH or STR Data Lab, which is your podcast, this is where they're going to get to know you better. We're going to dive in deep on a lot of good topics, maybe that we don't hear on those other shows. So, Jamie Lane, I am pumped because we did some prep work. And for the listeners, let's set a little bit of a scene here outside of the intro of what I said about Jamie. Obviously, he's a chief economist at AirDNA, and we've had Demi Horvat, the former CEO, on the show before to announce some recent news on some acquisition stuff that you guys have done. I got to meet with you and your guys' new CEO, Rohit, in Denver, grabbed a couple beers, got to hang out with VRMA. Great stuff. So AirDNA is no new company. I think anyone who's been in the industry or just getting in the industry really does know AirDNA brand beyond probably what most brands wish they could do in our space.
Yep.
And you didn't start at AirDNA. You started actually way back when at CBRE, but I also know you've got quite the extensive history. So where does your career and journey begin in the data world, specifically in travel and hospitality?
Yeah, it actually started at a company called PKF Hospitality Research. Started there in 2010. It was a fun story of a friend told me what he did. Just hanging out, 22, your buddy tells you what they do for their job. And he's like, oh yeah, I'm a hotel economist and forecast the hotel industry, do all this interesting analysis. And I'm like, that's what I want. I was like, let me come work with you guys. And they're like, we might hire another economist in a year. I'm sort of the only guy working for them right now. And then they called me in a year and they're like, you want to come work with us? And I'm like, yes, absolutely. Let's go. So quit my job, told my new job, becoming economist, that I needed 6 weeks to finish up my old job, went and traveled Europe for 6 weeks.
Wow.
Actually on couch surfing solo, which was sort of back in the day. And then sort of got going. PKF was then bought by CBRE in 2014. And in that time at CBRE, I was able to take on not only hotels, but learn oversaw forecasting for all commercial real estate at CBRE, industrial, office, apartments, sort of oversaw a team of 9 PhD economists and data scientists, and really got to learn how a data org that does forecasting, that processes millions of data points, like works well. And for me, that was a huge sort of growing up experience of doing that for it was a Fortune 150 company. There's 100,000 people at CBRE. But and in the back of my head and really in my actions, like I was still like head of hotel research at CBRE on like my sort of side job. And then my side job was on the weekends. I was still digging into the AirDNA data because and rewind back to 2015. I was the first AirDNA customer while we were at CBRE. I was like finding people on Upwork to like scrape Airbnb data so we could figure out what was happening in terms of short-term rentals, how much they were, whether they're impacting hotel performance or not. So like when I heard about AirDNA, I called up Scott. Call the phone number and you like get the CEO on the phone. There were only,
back in the good old days.
Yeah, there were only 3 people at the company, the 3 co-founders that were sort of hanging out there in the garage in Santa Monica. I was like, give me all your data. I want reselling rights to the entire hotel industry, and I'll pay you guys $40,000. And they were like, done.
We're in.
And then from that point, they had like CBRE on the front page as a customer. Like it was a big deal for the company. And for us, it was, and we were able to have that data. No one else had it in the hotel industry. We were able to tell the story of sort of the growth of short-term rentals, how it was impacting traditional hotel performance. And I sort of built myself up as an expert on short-term rentals within the hotel industry.
Epic. And there's so much to unpack. So before we get into it, obviously we have probably a good hour or more if we have time to jump into multiple topics. But I think the AirDNA piece, transitioning from hotels, is really fascinating. But before we get into that, I do have a question I'm pretty sure listeners are probably thinking of or wondering as well. What qualifies or standards an economist? I've never heard of an economist until we're like, or at least an economist in our industry until meeting you. So can you just briefly describe an economist and what qualifies that? Because I'm sure there's tons of pieces that we're missing.
Well, and I do have 2 degrees in economics. So I've got an undergrad and master's degree. So school helps. But how I sort of define an economist is taking, and what my role is to interpret what's happening in the overall economy and boil that down to what it means for our industry. And then track the trends in the industry and help you as the listener and someone that's operating this business on a day-to-day basis, someone that's investing into a business, whether you're investing into a home that you're going to use as a short-term rental, or you're investing into a tech business that serves the short-term rental industry, investing into as an LP into a private equity group that owns tech companies, whether you're a property management company, figuring how you're going to and why or how you should expand into this industry. So we all want to plan off of what's going to happen in the future. So it's, as an economist, the role of an economist is to take what's happening now in the economy, what's happening now in this industry, and project that forward of what we think is going to happen in the future, and how you as an operator, how you as an investor, and should think about future performance and how that might impact your business.
So I should have called you before I invested in TopKey and Storied and a couple other companies in our space, is what you're saying?
And it's not necessarily that they're going to dig into the underlying business models, but of making projections and talking through of like what maybe if TopKey is going to work. And I love the guys at TopKey.
Same.
Like,
Shout out. Happy with my investments, by the way, everybody.
right,
Don't. And this is also not investment advice. Disclaimer.
right. That maybe that there's going to be further professionalization in the industry, that supplies continue to grow, and if those two things are true, then a software centered around that we're going to have more professionals that are going to want to manage their expenses in an efficient way, like that could work. So there's a lot of data that goes into understanding, like, is the industry getting more professional or not? How do you define more professional? And then, is the industry going to continue to grow? There's quite a few analysts, I wouldn't call them economists, that were predicting that the industry was poised to collapse, and that we were going to see hundreds of thousands of short-term rentals leave the market, and that cause a collapse in the housing market. So like, and those are predictions that economists can and do make, and you want to make sure, and if you believe someone's predictions, that they have sort of qualified to make those sort of proclamations.
So people aren't just giving out the title economists left and right.
Oh, no, I totally,
like actually prestigious.
I totally just like made it up one day. Actually, my roommate back in, this was like 2012, because I started at PKF. I was just an analyst. And then like one day I was like, you know what? Like, I'm going to change my title to economist. And I came home, and my roommate and he had just gotten done with law school and spent like 4 years like getting this title of lawyer. And he's like, so you just changed your title to economist today? I'm like, yeah, I think it better reflects what I'm doing. Yeah.
I love it. It's a quick title change, never hurt nobody, except for the lawyers that have to actually go through law school. Well, I love the story of like how you were the first customer of AirDNA, because I got to sit down with Scott very briefly 2018, 2019 on the pod. Like, this was when Slick Talk was really starting to take off, right before ramping up in COVID. And I did a mastermind series, the 10 most epic vacation rental management companies, softwares, technologies, and Scott was one of them. So AirDNA was obviously a big name, and I was in Seaside, Oregon. I was a hotel manager of a 70-unit condominium hotel with a very heavy short-term rental, vacation rental market. Obviously, tons of listeners on the show are operators in this market as well. And I was getting interested in revenue management. I was obviously really excited about managing the front desk and the team and making sure that the property was profitable. But I started to see this little thing called vacation rentals and discovered AirDNA as well. And I thought, for me, I was like, oh, this is the first time hotels was really bringing in short-term rental data and analysis into their strategy, right? But you obviously were the real OG in that. And so what, I guess, like, the way I want to frame this is like, how does one person grab this information and try to piece it together when it hasn't been done before? Obviously, I'm sure you had to have a lot of talks with Scott and the rest of the AirDNA team, but I'm sure there was a lot of learnings that came through that. So I'm just kind of curious how that initial beginning process was, and kind of leading up in today, and then we'll go into some more topics.
Yeah, and I'll admit, like, bringing hotel or short-term rental data into the hotel industry was a complete failure. Like, never made any money off of it. We sold some subscriptions, but it only covered the sort of $40K cost of essentially gave me free data to play with. And a big piece of it was in the hotel industry. Like, I could see it being really helpful on the Oregon coast, independent boutique hotel. Like,
sure.
Not a lot of comps out there. You go out, try to get your star report, and it's like, no one contributes. So like, and there's not a lot of data to sort of build your industry off of. Our
star report was just everyone dropping rates because they're just trying to fill rooms. It was so annoying. I was like, guys, I'm actually trying to make money here.
Yeah.
But yeah.
Yeah. So, and what we did was, and we tried to build out views that would help someone that was sort of analytical at a hotel company. In reality, it only ended up being useful for the public hotel REITs. So the public companies that their investors were asking them, like, how are short-term rentals impacting your business? And this was like 2015, 2016. Airbnb's growth rate was, and listings were doubling every year. People and investors were really worried on the hotel side of like, how much supply is this? How much is it impacting ADRs in traditional hotels? So really what it gave us was a variable, a data point to introduce into our forecasting models for the hotel industry to make our predictions there more accurate. Not necessarily that we're creating like the STR report for short-term rentals and bringing that hotels, because quickly we found that they didn't want it. They weren't going to use it. They weren't using the STR reports they already had of their actual competitors in the hotel space, or at least most of them. So it didn't make sense to try to add another variable to their arsenal that they weren't going to otherwise use. And I think we've sort of seen that, and in some extent with OTA Insights buying transparent of like, it's still, I don't think, a data point that hoteliers are looking at on a regular basis outside of maybe the unique and independent boutique hotels that they really have to be tracking how short terminals are pricing on a day-to-day basis.
This actually might be a perfect segue then for kind of the first topic I wanted to bring up with you is like the industry landscape and comparisons, because I know for me, when back in the hotel days, and I'm very rusty, right? Like I haven't operated a hotel in a long time, but I just know so many hoteliers were so casual with giving OTAs the amount of money they're giving them, right? They really weren't like trying to find creative incentives or ways to really focus on book direct and other loyalty kind of features or products or offerings, versus the short-term rental industry, I think is so much different. And I would be surprised, like obviously creating a STR report for an individual host every month or whatever, that's a lot of work for AirDNA. Like with the amount of hosts that are out there, like over 8 million, good luck. Have fun with that. Like that's a lot of reports to send out. But how does the current growth trajectory of the STR industry compare to that of, the traditional hotel sector? Because I think obviously we've seen hoteliers get into short-term rentals. We've seen now short-term rental operators get into boutique hotels. So there's a lot of mixing happening. And our good friend Brandy, they have mixed inventory, right? They're kind of hotel-esque with short-term rental ops. So yeah, just very curious on your thoughts on all that.
Yeah. And one is, and when you think, and I'm going to talk about the US hotel industry just to like, and separate that from some global. US hotel industry is very mature, and mature industries typically grow like at the sort of same pace as the overall economy. So like typical year, we get about 2% GDP growth, and we spend about 2% more on travel every year. And as an economy, maybe 3% because people spend a little bit more every year on travel than they do on other things. That's sort of the shift from goods to to experiences that we've been sort of tracking over the years. But like you don't get outside of the fact that a good year for hotel growth, either on supply or demand or rates, is like 2 to 3%. And right now we're well under that at like 1% supply growth for the hotel industry. Maybe 1.5 new, you got 0.5% sort of churning out, becoming obsolete. So, and then the big hotel chains like, and Marriott, Hilton, like growing maybe 4 or 5% inventory, most of that happening outside the US. So there's not a lot of growth. There's not a lot of innovation happening in terms of new product, new sort of things in the hotel space. Very sort of mature. You contrast that with short-term rentals, and like back in 2019, industry was growing 10, 15%, sort of 7, 8x the growth rate that we were seeing in traditional hotels. And in the years after COVID, it was growing 20, 25%. We see we see so much innovation, people trying new things. We see so much churn. So we talked about like 0.5% churn in traditional hotels a year. We've got like 20% churn in short-term rentals every year. So what that churn means is that there's some things that just aren't working. There's some things that are working. And then you see these movements of like, all right, like everyone now in Gatlinburg's got to put in a hot tub. And then you see people that weren't willing to do it, they churn out. And then every new listing now has a hot tub. And you can get to really nice, I'll call it professionalization, but I think it's more of like a real competitive product with hotels. And you look at how short-term rentals have evolved just over the past 6 years, and the level of quality, the level of sophistication, and the number of operators sort of using dynamic pricing, using a PMS, listing on multiple channels, doing all these things that really make it where it's going to be a sustainable business has been evolving so much over this time period. And it's just such an exciting industry in that realm where like in hotels, like you're like, oh, Marriott launched their 37th new brand, and it's a mid-scale extended stay that they're going to be using for
Apartments by Marriott.
conversion. Yeah. um, and you do see some sort of interesting stuff on the tech side. Like Muse is great on terms of trying to change
For sure.
the way PMSs work in the hotel space, but it's just so slow to change. It can be so hard to sort of test new technology given the sort of oversight that the brands have on so many properties. And where in short-term rentals, like I've just loved how a company come in with an idea. They can launch it out there. You can get 1,000, 2,000, 3,000 hosts just by running some Facebook ads to test your tool and get instant feedback. And if you've got something that works, you sort of see the sort of flywheel work of other people telling their friends about it. And like, and great example is Bestie AI. Like they launched something a year ago, and then 1 year later, they've already got $1 million in revenue. Like that's just super exciting to see on how the industry can evolve like that.
I don't disagree with you at all. And shout out to Sam and Arlo and the whole Bestie team. Been super thankful to be an advisor with them. I'm sure you've gotten to work with them a lot too with their product, and just awesome team.
I just had Sam on the STR Data Lab 2 weeks ago. So it was amazing to see or talk to him, and that they're a partner with Uplisting, our PMS. Yeah. So we're able to push our users into using Bestie AI through the integration there. And it's just one example of how the industry can innovate so quick. You can get sort of real time and feedback. And as long as you're taking that feedback and bringing it back into the product, innovating, and you see so much new stuff move from who are these guys to I see Top Key now everywhere, and they've built a great business because they really listen to their customers and solve a real pain point and are able to grow.
One last shout out on the whole Top Key thing. Matthew on the team is incredible. The most hospitality focused customer support guy I've ever met. And I know customer support's not your real title, Matthew. So if you're listening, I'm so sorry. But you are just he's an incredible human being, and he just takes care of every customer. And it's just crazy how above and beyond he goes. And so shout out to Matthew. John, if you're listening, give him a raise, more equity, whatever you got to do. But I want to go back to a point you made really quickly in the sense of the 20% churn in our industry. I want to know what contributes to that 20% churn. What do you think are the real attributes that are making operators get in and jump out?
Yeah. I think a big piece of it is just the transitory nature of short-term rental and listing a property as a short-term rental. It's and we talk with investors all day that are buying a property that they're going to list as a full-time short-term rental, and that it's going to take either underperformance or a change of investment strategy, something pretty monumental to cause them to delist that property. And I think that is the minority of rentals out there. A vast majority are, I've got a second home that I already have. I'm going to see maybe I do want to earn some income occasionally when I'm not using the property that like from that condo I bought in Aspen to use with my family during the holidays and maybe in March, and like, hey, yeah, let's rent it out. And then you realize like, oh, this is a lot of work. Like maybe it's not worth it, or maybe I want to list it with a PM. And then you're like, this PM's a pain. Like, and they take all their fees, and like now I'm only getting like 10,000, like, and now they limit me on when I can actually use it. Like it's not worth it. So you have a lot of that. You also in urban areas just have a good amount of people that, and maybe they inherited a home, they've got a second home that, and maybe family lives in part-time. You've got, and maybe snowbirds that are, and 2 homes, one in Canada, one in Florida or Arizona, or these different areas that they, and for life reasons, like rent it out a bit, don't rent it out a bit. Like, and my parents here in Atlanta during the winter, up in Maine during the summer, and like their house either sits empty or we rent it out Airbnb. Like some years we rent it out, some years we don't, some years we find, and just a friend that needs a spot for 6 months. Like there's so much fluidity between short-term, mid-term, long-term. I need a home for my grandmother to stay in for these few months. Like the way housing is sort of used, I think is changing. And I think short-term rentals are a great option, especially in urban areas, of when a property doesn't, when I don't want to rent it out as a long-term or midterm rental, that I'm going to need some other use case around the property. Like, I'm going to rent it out for a few months. Like that is such an amazing sort of unlock of value that short-term rentals provide that I don't think enough cities think about when they're sort of regulating, where you think about a Paris and like where they put a limit of like, all right, you can rent out your home, but it's sort of limited to 90 days throughout the year. That still allows an amazing unlock of like unutilized time in a property of like, all right, like everyone leaves Paris during the summer, like all the tourists come in, like why can't, or why shouldn't I be able to rent out my home when I'm not there and have it cover the mortgage when I'm down in the south of France, sort of frolicking and not working for those summer months. And some cities are realizing it, and they're seeing what a benefit it can be for their citizens, and others sort of don't. And I think all those things sort of contribute to the churn of like, it's not real churn. And it just sort of is a visual representation of like how so many people are just coming in and out of the space based on sort of their needs of the properties that they own.
Yeah, it's not real churn in the sense of it's just not full-time activation of a property. It's ebbs and flows with each individual use case. It's not like a hotel where it's legit just designed for transient guests. Vacation homes are a little bit of a personal use, family, friends / let's make some money, or let's just leave it open. Yeah,
but it does speak to the problem that Airbnb and Vrbo and Booking have of you've got to keep innovating on your business model. And if all of a sudden a whole lot of more people are starting to use it for midterm rentals, like Airbnb, like you should evolve like how you do payments for stays longer than 30 days. Like you should evolve like what your service fee is for 3-month-long trips. Like, and that's where I love that when they see how people are using their platform, that they're modifying their platform to suit that need, not necessarily trying to change someone's action to fit the platform that they built. And that's where I see true innovation happening, like of realizing something that's happening, that you can make that sort of product market fit just that much better if you, and make it easier, and sort of evolving to how people are using it, opposed to like trying to fit people into the model or the view that you have of how the product should evolve.
So basically, all the hoteliers that had the mindset of like, we've always done it this way. We've never changed. Like, why would we do that? And like the OTAs can't get away with that. They have to evolve. In order to stay relevant, in order to just bring the money in, because that's how they get their commission. If their people aren't booking and they're not changing to the way operators are wanting to address it, makes total sense. So it can no longer be the excuse of we've always done it this way. Why would we change it?
Ryan, what do you mean hotels don't evolve? Like they all realize people really want waffle makers, and they all put a waffle maker in the lobby for breakfast.
Hey, continental breakfast for the win. But yeah, no, I just remember because that's one thing I know the listeners have heard this on the show many times. But the owner I used to work for prior to jumping ship was always, I was like, we're giving Booking.com $180,000 a year. Why? Like, we need to focus on other things. Like Expedia is taking less, and And he was like, oh, so the way it's been. What? You're okay with that? Anyways, moving on. Tangent or brandy rant over for those who know. But I'm curious. So there's these kind of topics all kind of tie together. But I am very interested to see like what are the most significant economic trends that are impacting short-term rental markets. Obviously, the ebbs and flows of the way people are using these, this inventory. But economically, I know we've seen a kind of a crazy shift over the last 4 years, pre and post COVID. Plus, I would even call post gold rush, 2020, end of that year, 2021 era, as we've discussed many times on Good Morning Hospitality. But yeah, what do you think the overall significant economic trends are impacting us?
Yeah. And what's just been a wild ride for me is tracking supply. Supply and any manager host you talk to, it's like my market's oversaturated. I see so much supply growth. It's hard to compete. Like, and there aren't enough guests for all these listings. Like, what do I do? And sort of going into that churn discussion, like during COVID, we saw like 20% of listings just like disappear overnight. And people had the ability to work from home. If you had a second home and you lived in New York and it was up in upstate New York, you were probably moving to that second home. Maybe you used to rent it out on Airbnb and like now my family's there and we're going to be calling it in. Like you had all the urban supply, like the Sonder, the Domios, the Stay Alfreds, the front desks, like lyrics, like all these companies just struggle. So many of them went out of business, inventory reduction and changing inventory from short-term to long-term rental, given that that's what and was really strong. Like a lot of companies sort of pivoted their business models for good reason. And what that meant was like, and we had a whole lot fewer listings. Demand came back really strong in 2021. Listings did not. That pushed the industry to record performance. And then you sort of had this time in 2022 where we had really low interest rates, home values yet hadn't started to increase, and the average revenue a host could earn had increased 30%. And it was a gold rush. Like you could, and we joked on the podcast that you could put a tent in your backyard and rent it out 100% because there was so much.
$5,000 a month.
And yes, there was strong demand for travel, but it wasn't like demand for travel had gone through the ecosphere. All that, we just had 20% fewer listings and demand came back to normal. And that meant that, and if you had a listing, you were doing very well. So we had strong supply growth in 2022, 2023. And now we sort of seen the opposite effect of we have really high interest rates and those interest rates are going to be higher for longer. Like if you're sort of sitting on the investment sidelines waiting like, I really want to 3% interest rate again. And now they're close to 7% and I'm going to wait till they're 3s again. Like you might be waiting forever for that to happen again. We've got home values that accelerated a lot. They've sort of plateaued, but I don't see them going down anytime soon. So that's something that's very local though. And there are markets that are seeing decreases in home values. Like you're sitting in Austin, like, we've seen some pretty steep decreases in Austin or San Francisco. But overall in the US and in most markets, we're seeing home values stay up. And then you've got short-term rental performance. Like how much revenue are these properties earning? Like, they increased 30%. Now over the past 2 years, they're down like 10%. So now we've got like, all right, we're up about 20% from pre-COVID. That was 5 years ago that COVID started. Like, so that's an annual growth rate of like 3 or 4%. Like that's pretty normal industry growth. So we're about where we would be earning and without the pandemic in terms of ADRs and occupancy. So and we expect sort of normal growth going forward for industry performance. Like we're probably going to be flat on occupancy, get 2 or 3% on rate. You're going to be able to sort of cover increasing costs, but we're pretty normalized in terms of industry performance right now. So now it's like, if it doesn't make sense to invest today, like, do we think home values are going to decrease, or do we think interest rates are going to come down meaningfully, or do we think industry performance, unit level performance is going to increase meaningfully? And the answer is there's probably going to be small incremental improvements on all of them, but it probably doesn't mean is that we're going to go from, and we're like 4 or 5% supply growth right now, up to 10% anytime soon. So if you've got a business model that is sort of predicated on 10, 15% industry supply growth, like you might be a bit disappointed. But if you're an operator that's been crushed by 10, 15, 20% supply growth, and you're like, can we just like pause on supply a bit and let us all get our operations back to profitability and sort of growing occupancy again and ADRs? Like that's where I think we've got some positivity. And I think it's going to be a sort of a pause on supply growth for a bit. And we're still generating 5 times higher supply growth than the hotel industry. But for the industry, it's about a pause. And we'll see maybe 2016 or 2026, 2027. And depending on what happens in the housing market, that we can start to see growth again.
Well, I have 2 questions for you. And the first one I want to ask is more around, it just sounds like people normalized the gold rush that we had. They expected this to be consistent rather than obviously looking at the data that you guys have analyzed over many, many, many years, plus, predictions and forecasting as well. It sounds like operators just normalize that expectation of we're going to grow like this. This is great. We're raking in money. This won't go away. People love love the product, right? Like COVID opened up the door when you got the 2 weeks of flatten the curve to being in the house with your loved one and the families, and you're like, all right, instead of being at my house, let's do it somewhere else. It just sounds like we normalized, right? Like that was the expectation. And instead of thinking about like, oh, maybe this is just a quick boom, we should kind of prepare for the downfall of the boom.
Yeah.
Am I right or am I wrong?
Absolutely. And like, and it was a funny time when I joined AirDNA because it was at the end of 2020, like just when like, and we reached sort of peak industry performance in terms of RevPAR at like mid 2021, end of 2021. And that's right at the time when we were creating our first sort of industry forecasts. And like our first projection for 2022 was that RevPAR was going to fall. And looking through the history, RevPAR had never fallen in our entire history. And I come in and they're like, Scott, CEO's like, so you're going to create our first forecast. We've never had one before. And you're going to say that industry RevPAR is going to drop like 5%. I'm like, yeah, we're like peak occupancy. We're well above levels we've already been. We can see the supply wave coming. Like, yeah, like it's going to drop. Sure. And so, and that's, and why you want sort of an economist, why you want sort of these analysts looking at the data and trying to make predictions and trying to build models off of this stuff. Because like occupancy does, like you look at hotel data, you look at any sort of measure of like occupancy that is sort of driven by supply and demand, like over time, it evens out and it sort of oscillates along the long run average. And if you get to a time where it's well above, that means people are earning excess profits and supply is going to come in. And if you get below, that means people are going to stop investing and that's going to allow industry performance to catch up. And like, it's just cycles, and industry cycles, business cycles have been around since the beginning of time. And it's sort of applying that sort of thinking to now, okay, what's happening in our industry?
Yeah, well, very well said. And the second question I wanted to ask, and I never get political on the show. We never bring up politics or elections, but obviously we're recording this post election day, and we saw the Fed drop rates pretty quickly. I was actually surprised. Is that going to impact anything? Like, I know we're not, like, for the investors that are listening, waiting for that 3% interest rate, probably not going to happen, but the Fed is still dropping. potentially predicted to drop more. The stock market is up. Bitcoin is up. Record numbers, right? Like all these things seem to be up. Can you does this impact the outlook for the next 2 years, or is this just again probably a post-election high?
Yep. So, and a few factors there, and what the Fed does, and is really impacted by what's going on in the economy. So, how does the election impact what the Fed is going to do? In the near term, it doesn't impact it at all. No matter if the Democrats or Republicans would have been elected last week, Jerome Powell and the Fed still would have dropped interest rates by 25 basis points. That was baked in. And that's all the
they did confirm that was baked in. That wasn't we're seeing okay, cool. No. Good to know.
And we're probably going to have one more. We're going to have one more drop in interest rates in the December meeting. And that there's prediction markets on it. And we were at a 95% chance of a 25% basis point cut from the Fed. And there's still, I think there's 70-80% chance in December. And that's absent on what's happening in the White House. What is going to impact maybe longer term, what the Fed's going to do is any changes from the administration in terms of what maybe happens in terms of inflation, because that is what the Fed is sort of charged with, is two things: full employment and stable prices. And stable prices has sort of been defined as a 2% change in CPI or inflation on a yearly basis. So we're all comfortable with 2% increases every year. We don't want it too far below. We won't want it too far above. And if inflation gets too high and you got to raise interest rates to sort of slow growth and move it down. What the election does sort of change is right now we've got a divided Congress and divided government. So you've got the Democrats in the White House. You've got Republican control of the House. So in many ways, there's just not anything happening. That's going to change come January. The Republicans are going to control the White House, the Senate, and the House. And what that means is that they're going to be able to pass stuff, and more than likely, they're going to pass more spending. They're going to pass tax cuts, which will be and stimulatory to the economy. And more than likely, that's going to lead to more inflation, which is going to mean more than likely that the Fed is going to cut interest rates as much as they otherwise would have if we would have maybe had a Democrat in the White House and Republican control of the House and Senate, which probably would have meant that, at least for the next 2 years, that nothing was going to get passed and no new spending or tax cuts were going to be happening. What that also means, and relating that back to the industry, and we were talking about supply growth and interest rates, is that, and because the Fed isn't going to be cutting interest rates as much, that more than likely means that there's a higher floor for 30-year fixed rate mortgage, and that we're much more likely going to be in the 5.5% to 6% mortgage rates longer term than maybe getting down to the 5 to 5.5. So most economists' expectations going forward is maybe a little bit more growth in the overall economy, and we're going to be spending more. We're going to be cutting taxes. We're going to be trying to stimulate growth, so maybe lower unemployment. But then maybe a guardrail there of that the Fed doesn't cut rates as much, maybe even has to increase them again if inflation does start to accelerate, and sort of cools the outlook a bit. And then you have just the really big unknowns of what's going to happen on terms of immigration policy.
For sure.
And there's two factors there. One, if you just slow the overall growth of immigration that we have coming into the country, I think most people agree that legal immigration is good, and really the overall growth of our country is sort of predicated on immigration, that people want to move to the U.S.
Key word is legal, though, right? Legal immigration. That's the key phrase.
Yeah, there. And when people come to school in the U.S., that they're gonna like they earn a degree from Harvard that they can actually stay
Yeah,
in the US and sort of contribute
for
to the
sure.
economy. Um,
Yep.
and
And
I
innovation
mean,
and creating startups and all the fun stuff.
right. And if you look at China, if you look at a lot of the major European countries, like they don't have inbound migration. Their populations are, and many of them are decreasing now. Like we're
Hmm.
just in the US, we do not have a birth rate that is replacing our sort of natural rate of like people dying. So unless
Hmm.
we have immigrants coming into our country, you're going to start seeing populations decline and all sorts of bad things start to happen in the economy if you've got falling populations. Because then you
Hmm.
don't need as much housing. Then you got housing values that start to fall. So you start thinking about and investing in a home that's going to be a depreciating asset. Like that's really scary. You start thinking about your economy that it's inflation's not going to grow, that you're not going to get a raise every year, that your salary might actually decrease on any given year because prices are going down. So, and a healthy amount of immigration is good for the overall economy. It's built on what the country was sort of built on growth. And if
Yeah.
we and if that flattens or even starts to decrease, and with and that could have long term detrimental impacts to the country.
Yeah, I'm very we won't sit on this topic much longer, but in the sense of legal immigration, I think it's going to be really important that our government gets more efficient. As I know, this the new party coming into the White House is very hopefully actually going to live up to that statement of like making the government more efficient, getting rid of some agencies that are not needed, and actually create a process that makes the great or it makes legal immigration really good for the good people that actually do want to come in and do contribute to our society and become citizens and live up to our values and our constitution. So I hope you're right in that term because diminishing population is a little interesting. Sounds like for all of those of us who are single need to start shacking up and putting some rings on some fingers so we can make that
Yeah.
make that a little bit
Well,
different.
if you could start doing your part, like
Yeah, seriously. Hey, I'm working on it. I'm talking to someone now, so more to come later. But we'll see. We'll see. Jamie, one of the interesting things I really did want to talk to you on this episode about was some technology stuff. And I know we covered a lot of data, a lot of economics, and even some politics, which I have never done on the show. So for listeners, just know we try to be as very respectful as possible with your personal political beliefs. And we don't want to impose anything there, but just take this all with a grain of salt as you can. The short-term rental tech ecosystem is very interesting. Obviously, as you know, Andrew Kitchell, been on multiple times. We talked about the tech landscape, and you guys are an interesting player. I was thrown off in the beginning of this announcement or early news that we got about you guys acquiring Uplisting shortly after acquiring Arrivalist. So Uplisting, for those who don't know, Vinny actually was on the podcast back in 2020, the co-founder of Uplisting, which is a great property management platform for investors and operators. And I was surprised. A data company. Why would you guys acquire a property management software? I think I know my answer, but I think many people in the industry are very confused. I maybe heard some stuff at VRMA that people are like, why would they do that? This makes no sense. But I'm like, oh, if you look at it this way, this actually does make sense. I promise.
Yeah.
But yeah, give us a big picture of acquiring Uplisting and what this is going to do for the data and AirDNA as a brand overall.
It was funny. I was when I was in Porto for Vacation Rental World Summit, I was chatting with Richard Vaughton, and he's like industry
Yes.
veteran that's been around for forever. And he's like, comes up to me, he's like, when I heard you guys bought Uplisting, like I just thought it was the stupidest thing I'd ever heard. So like, let me tell you what I told Richard, because afterwards he's like, you know what, that makes a whole lot of sense. So hopefully I can sort of clear the air on like why we at least I thought it made sense in terms of analyzing the direction that we wanted to go. Because when you look at AirDNA, our core client base, and this surprises so many people, is those sort of Airbnb host investors with 0 to, let's say, 10 listings. So it's not the large professional manager. that we have a great business around supporting professional managers. It's not, and hedge funds, though we do support hedge funds. It's not just DMOs, though we support DMOs. It's not just raw data that we give to the really big VRMs, and we have a business doing that. But like over half of our revenue comes from providing data to those and people that don't have a property that want to get in, and those that just have a few that need simple tools, data to support their business, whether it's through setting pricing strategies, setting their rates, or figuring out what market they're going to invest in next and benchmarking their performance. So when you look at the sort of industry operations landscape, so like in the US, there's roughly 700,000 hosts. And in this number, we'll sort of track a host the same as like a property manager. So you can have a 1-unit host, or you can have like a 500-unit host. And you think of most PMSs out there are sort of geared towards the sort of large property managers. And in the US, there's about 8,000 hosts that have 20 or more listings. And that's what sort of the guesties, the hostaways, the streamlines, they're all sort of fighting after is, and how do I have a product, enterprise, and I can make one sale, I get all their listings, I price my PMS on a per listing basis, and I can grow my business, and I sort of lock them in, and they're good. Unless you're Brandy and you change your PMS every 3 years or every 3 times every year or whatever.
Three times in like, I think last 4 years or something like that. It's kind of crazy, but hey, to each their own, right?
Yeah. So then you look at the rest of the ecosystem, and we've got roughly 700 or 690,000 hosts with fewer than 20 listings. And not a whole lot of companies out there trying to provide services to those hosts. And what we see is like, we can see in the data that now over 20% of those listings are cross-listed on Airbnb and Vrbo. We know that more and more of them are winding their own direct booking site, that they want to list on booking.com, that they want to be able to list on Google Homes, that they want to professionalize. And when they go to some of the larger PMSs, like it's super complicated. It's built for a large property manager. Like I love Andrew and Wheelhouse, but their product, and I think purposely so, is built for someone with 20 or more listings. And a lot of the PMSs are done the same. So we've already got this large sort of critical mass of hosts in the AirDNA ecosystem using our platform every day. So where could we add additional value to those hosts in a way that is sort of organic for us? Like they start their short-term rental journey with us, they find their property, they buy it, they're starting to measure their performance, they're figuring out how to expand. It's like, let's sort of include in here a PMS, a way to sort of grow their business on the host side, and that where we can keep them in the AirDNA ecosystem, and where they then don't have to leave to find that next sort of PMS or tool set. Because what most hosts need, like, and we talk to them every day, they're like, I just want simple channel management. I want a simple unified inbox, like where all the messages come into one spot. And I want a way to have a unified view of my calendar of where across all my channels, how everything's being booked, and manage that all in one spot, easy to use, easy to understand, and that just works across all the platforms. And that's what we saw in Vinny and Uplisting, and that's what we're trying to sort of bring in and through now to AirDNA.
I love it. And it makes so much sense, because the biggest gripe I've had with vendors in our space, as we get to work with a lot of them as they're sponsoring our shows or, going to our retreats or whatever, they all want enterprise. They're like, oh, how many units do they got? Oh, they have 10? No, it's 20 or more. We need 20 or more, or 50 or more. Some people. And I always say, like, I get that you build for enterprise, because then it can make it maybe simpler to create a product or a light version later. But you're missing out on such an evolution of this operator that will get to 20, that will get to 50, that will get to 100, They just need the tool to get them there outside of Airbnb, which is trying to probably become a PMS as well, which we discussed on GMH. So it's like, okay, we do need to focus on this, and no one's really offering them. And it kind of goes into the debate of old guard and new guard, where new guard doesn't feel welcome at VRMA. They feel like the content's outdated. It's very clicky, And then old guard is, well, these new youngsters are trying to reinvent the wheel, and we've done this before. Like, it's the same thing. We've seen this happen 20 years ago. And anyways, that's my other brandy rant of the episode before really getting into more topics, because I know we have so much to go into, and we're going to go over in an hour on this episode, Jamie, unless you got to go soon. But what is like total addressable market is where it gets interesting, because the majority of the big players right now are the hosts. In the sense of big players, they are a big portion of the inventory, the operating pie, versus the traditional or enterprise vacation rental management. So what do you estimate to be the TAM for the STR industry? And how has this number evolved over recent years? Probably, I'm going to just predict and assume that COVID had something to do with a change in those numbers or predictions. But yeah, I would love your kind of oversight.
Yeah. I mean, it's something that it's hard to put your finger on. But we try to sort of measure it, and one way to measure it is sort of total industry revenue being generated. Because if you think about like what a property manager, and their sort of revenues are going to be percent of total industry revenue. Typically, a PMS or dynamic pricing software provider is going to be maybe a per listing or a percent of revenue as well. So I feel like that sort of total revenue number is a good sort of indicator of like what the market is out there today. In the U.S. right now, it's about over the past 12 months, we've seen about $65 billion generated in terms of industry revenue. And that's up about 16% year over year. So what's included in that is sort of the rate someone's paying and the cleaning fee. And cleaning fee is actually a pretty meaningful part of that overall revenue piece. And I think to many guests again. But then when you compare that sort of industry wide, because so many players out there are international. So if you're launching a tech play today, more than likely it's going to be international, not just sort of domestic focus. Because you look at listings out there, US is only 17%-ish of total industry sort of supply. So US is actually a pretty small piece of the overall industry. You look at globally, short-term rentals generating about $175 billion in revenue. So pretty significant and sort of addressable market out there. And that we saw grow at 22%. So when you think about, and we talked about sort of short-term rentals compared to hotels. So we are maturing in a few key markets. And Airbnb talks about this. I think Vrbo talks about this as well. Like the US, the UK, Australia, France, there's a few areas where industry supply growth is not going to be growing probably 20, 30% anymore. And then there's so much of sort of the global ecosystem in so many countries where short-term rentals compared to hotels and just short-term travel in general, just totally under penetrates sort of what's going on in the overall economy, especially in short-term rentals, where you can just point to so much growth potential. Like in Latin America right now, revenue's growing 35%.
Wow.
In Asia Pacific, it's growing 25% plus. So there are these areas where there's just a lot of potential for future growth. And that's where, if I was thinking about like where I wanted to sort of set myself up in front of, I'd be like, all right, like, yeah, maybe I can steal some share in the US or I grow into this market if I have something really unique. But if I can have a product that's going to help host in Latin America, help host in APAC, really grow make it easy to grow in these international markets, this is where we're going to see a lot of future supply growth going forward.
Super insightful. So much to unpack still, but I'm curious, kind of the secondary question around all of this is, I think you've seen it, I've seen it, a lot of short-term rental investors, operators, owners, etc., have gotten into the space, and now we're seeing a lot of them actually get into boutique hotels, right? They're buying hotels, they're flipping them, they're converting them, applying short-term rental technology, whether it's a PMS like Uplisting or using AirDNA data, maybe even like just adding some smart locks, getting rid of the front desk, you name it. I'm curious, how blended is this going to get? Because obviously the total addressable market for short-term rentals specifically is significant, as you just stated, but how much of that now is going to blend through operators on both sides, actually kind of jumping into these different sectors? Is that going to really impact? Is that really going to make a difference? Or are we just seeing it because you and I see and know everybody basically in the industry that basically wants to get into boutique hotel management now? Including us. I'm guilty. We got a hotel in Kentucky. Not complaining. I'm totally here for it. But just curious if that has any kind of impact overall.
Yeah. And there is, and on the tech space, every vendor wants to be an all-in solution. And,
for sure.
And you see that from AirDNA, you see that from so many others out there. And if you're not going to scale through just and getting more listings and having more property managers that you can sell to, like grow your offerings and be able to get more revenue from each customer that you already have. There's also and it's funny on the boutique hotel space, like you see so many short-term rental vendors and seeing opportunity there. And I think it goes back to the beginning of so little innovation on the hotel space. And like,
for sure,
it's almost the exact same phenomenon of, if you are a tech vendor in the hotel space, like I could care less about the boutique independent hotels. Like I want to create tech for the large chain hotels where I get one contract through Marriott and they push it down to all their properties. And that's how I sort of scale my tech. So you've got short-term rental vendors being like, oh, like I can sell to one hotel and get 80 units in one like foul swoop. Like this is amazing. So you do see an evolution there. I do see more innovation happening in the short-term rental space, as I said. But there is the sort of need to scale. And that is a challenging one. We're sort of making the bet that we can scale through a number of customers, and that we can continue to grow top of the funnel, and that we get millions of hosts sort of coming through AirDNA, and that we can convert some number of them. While others, it's like, all right, I know I've got to do a sales-led process. I know I got to go to these conferences and get in front of 10, 20, 30, 40, 50 property managers and hopefully get 10 or 15 sales out of it. It's just a different process of going about sort of the same scale question.
Yeah, you're not wrong. And it's very interesting. Like you mentioned, I think you mentioned, if not you, the person I was recording with before, Bart Jan from Automizer, we're talking about Muse, and as a great property management software, you can look at their marketplace actually and see a lot of short-term rental technologies integrating in there now. You got the Breezeways of the world, you got the Wheelhouses, you have many, many others. I even believe you guys are in there. I can't quite remember, but I think I saw AirDNA. It's been a while. I haven't checked. Anyways, it's a good sign of the times, in the sense of like, okay, I think this is going to be a little bit more significant of a play. But Jamie, before we fully wrap up this episode, I want to go into quick economic resilience and kind of risk factors, right? Like I think a lot of people, it's been a kind of a tough year for a lot of operators. We've seen operators go out of business. We see the lack of funding and acquisition, activity happen. But what shifts in, I guess not even what shifts, what macroeconomic risk factors do you believe could disrupt the short-term rental market in this near future? I think we're all we've been anticipating for the election to be done. Now it's done. what's the macros kind of telling you, and what can the listeners kind of expect in the short term?
Yeah, I mean, I'm pretty bullish on the economy going forward. I would have been no matter who's in the White House. We're in a lot of ways seeing one of the best economies we've ever had. We've got record low unemployment. We've got stable inflation now. We've got a housing market that, while not healthy, and prices are stable. I'd hate to be a realtor right now, though, just with the lack of inventory and lack of sort of transactions happening. But it really points out
changes
of like
on their commission too.
Yeah.
They change that whole. Sorry.
That when you look overall at the economy, it's really great. But there's sort of pockets that are in recession and seeing pain. And you see that in the industry too. Like on overall, like we're growing RevPAR by 2 or 3% right now. Occupancy is pretty stable. We're getting a little bit of rate growth. But that's not to say like out of the 6,000 submarkets that we track, like 2,500 of them are seeing RevPAR declines. There's certain aspects of the business, certain markets. Like if you were a big winner around domestic trends during COVID, and now everyone's traveling international again, like you're sitting on the coast in Florida, you're sitting in Orlando, like it's been a tough year or two as sort of travel trends have normalized. So that's where, and yes, the overall macro picture looks great. And I feel pretty confident that people are going to travel. People are going to spend and have discretionary income. And that we're going to continue this long-term sort of pull where more and more people want to spend a larger share of their income on travel and experiences than they are on purses and bikes or whatever they might be buying before. And that
materialistic stuff.
Yeah, when you look at overall travel, like of all the different sectors, short-term rentals are still growing the fastest. So like if you're going to sort of position yourself in some sort of like tailwind, like we've got more and more people that are going to continue to travel, spend money on travel. And short-term rentals are going to continue to take a greater and greater share of that overall sort of travel spend. Like, I think this is an industry that is good for the long term. Yes, there's going to be some near-term bumps here and there. And you're going to have to think about how to adjust your business model. You're going to have to continue to evolve how you attract guests, how do you evolve and how do you get customers. But I'm still very bullish on the long-term sort of outlook for short-term rentals.
Hey, if you're bullish, I guess I have to be bullish too. I'm gonna bet on you instead of my own gut, because I'm like, I don't feel like inflation's controlled, but if you say it is, I'm gonna listen. I feel like I'm getting crushed with it, but it's like, okay, let's go. If Jamie Lane is bullish, I'll be bullish. I'll be optimistic and try not to look at the last year and a half, or at least even the last 2 quarters, even, and just be like, oh my gosh. But Jamie, this is so good. I think we have to do a part 2. I think we have to, in the sense of there's so many other topics and questions I wanted to ask you leading into this episode that we're unable to cover due to schedules. But Jamie, for the first time on Slick Talk, how do you think you did? How do you think the listeners enjoyed this? Because I think you crushed it. This has been such a fun conversation. So I think we're going to have to do a part 2. We have to.
Maybe a part 2, part 3, part 4, part 5, part 6.
Hey, so
I'm happy to come back anytime you wanna chat, Will.
Do you want to be another repeating guest host every month on this show too? Just get that cycle going. Absolutely. For the listeners, Jamie Lane is on so many podcasts, so many stages, so obviously your own podcast too. So I won't be offended by you not wanting to be a guest host on Slick Talk, but one day I will convince you. We'll get a big sponsor and I'll be like, Jamie, I have an offer you can't refuse. But until then, I always like to ask the question for listeners. Obviously, I don't think you are a new name to a lot of people listening to this episode, but for those that haven't connected with you on LinkedIn or email or wherever, where would you want them to go? Because I know there's so many topics that we've covered on this episode that I would be surprised if you weren't flooded with messages and want to make sure that the listeners can get to you easily.
Yeah, and I'm pretty active on both Twitter and LinkedIn. So search me for me there. You can find me. And we and my team write a lot of content. So if you're interested in the type of things we're talking about, go to AirDNA's blog. We probably put out 20, 30 blogs a month, probably more than any other sort of company out there. We've got a whole team. We're digging into topics all the time that are really, I think, relevant to both operators, investors, property managers. And it's good stuff out there. And kudos to the team for continue to run with any random idea I have on a potential research idea.
I love it. And also for the listeners that don't know, Jamie Lane is not only an economist and working at AirDNA and doing all these things and talking about all the stuff that we just talked about, but you're also now a host yourself. Jamie's lane change has happened. I think we're episode 5 into the series that you guys have created at AirDNA. How's that process going of you investing in a short-term rental, getting it up, using vendors in the industry from, not staging companies, but design to furnishing to your own technology? Like, can you just give us a quick glimpse into your hosting experience so far?
Yeah, wanted to sort of put my money where my mouth is, sort of eat your dog food, whatever the metaphor is of going. And we decided to tape it sort of soup to nuts of finding a market, finding a property, and then getting into furnishing, staging, and operating. So we've just had guests 4
nice
stay at the property, all 5-star reviews so far. But it was
awesome
and way more work than I expected, a whole lot more fun than I expected to. And my wife and I had hosted early days of Airbnb, like back in 2011, 2012 for a long time. And now we've sort of got into the sort of investing in a dedicated home that will hopefully be cash flow positive and a great investment for us. But we'll see. And we'll keep everyone sort of updated along the way. But you can find that on AirDNA's YouTube channel, Jamie's Lane Change.
For sure. I was going to say for all the listeners, there's going to be quite a few links in this episode, actually, because we're going to link the STR Data Lab, obviously some other stuff that we've seen you on stage speak about, and then also your Jamie's Lane Change on YouTube. It's a great series. Congrats to you and obviously Austin and the other team members at AirDNA have put this together. It's actually really entertaining and fun to watch. And so I think you guys really came at a really good approach. For listeners that want to see this experience, go for it. It's actually really incredible. So I'll make sure that's all linked in the show notes. Your LinkedIn, your Twitter, all that will be in there too. So for the slick talkers out there, subscribe, give Jamie Lane all the love from the show and show him how much this conversation meant to you, as we're going to get to part 2, part 3, part 4, part 5, part 6, part 7, part 8. I'm just kidding. In the near future, obviously 2025, we're going to have a lot to cover. And shameless plug, you can see Jamie once a month or more times, depending on the topics that we pick for Good Morning Hospitality. We'd love to have you guys over there too. And Jamie, until then, we'll see you next time.
Thanks, Will.